This is Rick Ackerman, editor and publisher of Rick's Picks, and wanted to take a look at one particular gold vehicle. We've had an interesting discussion in the Rick's Picks chat room. One person who posts there regularly took a fairly large position with several hundred calls early in this move, which, as you can see, began. Well, it really took off in earnest on May 31st, and his play is kind of an all or nothing bet, $3,000 worth of pretty cheap options. He has recouped that and more, but plans to stick with it on the possibility that this is one of those sustained moves where you just stay with the trade for 6 months or so and you reap benefits instead of second guessing yourself each step of the way, maybe getting in and out of positions. So he's just decided to go with it. It's not certainly an odds-on bet. It's very rare that we can look at something and say, well, this is just a trend that's going to go for another 6 months. But looking at this chart, I just want to show you what's possible. At the beginning of the move, you can see I've got a target here of 36.67, currently trading 26, so the move would be a little less than 40% from here. And to give you some idea of how much leverage is in the options, if we go to we're going out pretty far here. Usually I don't take long-term positions in options because it is a wasting asset. Each day we hold a call option or a put option, it loses time premium value, even as it's gaining perhaps in intrinsic value. So looking out all the way to December, that gives us 6 months really to play this. And if we look at some of the out-of-the-money call options, again with GDX, which tracks its vehicle that tracks mining companies, and currently trading 26, so the 27s are out of the money. They're relatively expensive, but if we're looking for options that sell for 50 cents or less, that would be $50 per call option. We need to go to around the 32 strike. So let's take a look here, and they currently sell for, let's say, 50 cents a piece. This 30 strike is right here. So between now and December, if gold can get up to there and just a little bit above it to $30.50, the option will be worth intrinsically what we would pay for it today. So to give you some idea of how much leverage you could have had just getting ahead of this move that's taken place since May, I will show you a picture of, this is the 32 strike in those December the December calls. As of May 24th, you could have bought those calls at the 32 strike for as little as 6 cents a piece. And recently, let's see, this is a weekly chart. So the week of June 28th, they traded as high as 63 cents. So you could have made 10 times your money and very easily taken enough profits there so that you would have the remainder of your position for free. If you sell half of your position for just twice what you paid, assuming you got in at 6 cents, then your position will have zero risk, zero cost. A lot of options changed hands, let's say in this range. To get somewhere near the middle of it, you can see that 45 cents would be close to the middle. So people in at that level are just a little bit ahead of the game right now. And even when those options were at their peak, they weren't too far ahead of the game. So although you do get a lot of leverage, there's also some risk there. What I would suggest, if you were willing to bet that gold is in a very sustained move that could take it all the way to 36.67, is to buy an out-of-the-money call on weakness. Again, you'd be going out a few months on these options. And relative to the discussion we've had in the chat room this morning, it's a particular type of trade where you're just confident that it'll get there. And I mentioned having done a trade like this myself when I was a market maker on the Pacific Stock Exchange. Probably one of the best trades that I ever made was a buy of a very significant quantity of call options in shearing plow. And the stock was trading in the high 20s then, and I had out of the monies in the 30 strike. And the stock over a period of 6 to 8 weeks rallied into the mid 30s. And I can recall just leaving orders with the floor broker. Well, sell 200 of these if they get to $4, and sell another 200 at 450 or 5. So I scaled out these calls, did relatively little work, and it was probably the most money I made in a relatively small amount of time doing almost no work. So that's kind of what you're shooting for here in gold. You're just buying into the prospect of a further move here to 36.67. Again, a little less than 40%. That's a quite substantial move. And damn the torpedoes. There are going to be setbacks along the way, but I can tell you that if it just goes and you get to the point where you can buy 50 options, cheapies, and scale them out, you'll reach the point where you're not really worried that even when the setbacks come, you're not paying too much attention to them. You're only thinking in terms of selling options at higher and higher prices. So that's how that's what I am suggesting. And if you want to get some more specific details and you don't subscribe to Rick's Picks, let me suggest that you go to the homepage, rickackerman.com. And at the top of the page, just leave your name, email address, click Start My Free Subscription, and you'll be instantly on board. You can head for the chat room, be sure to say hello, and you'll find that the discussion there is very useful. The room is filled with a lot of helpful traders with a lot of experience from all over the world. So again, just to rickackerman.com, leave your name, address, click Start My Free Subscription. You don't have to leave any credit card information to sign up. So that's about it for today. I'll probably be doing my next Facebook Live video presentation sometime next week. But for now, let me wish you a very pleasant good day and a relaxing weekend.